In the Conference Board's latest confidence report, buying conditions for those big ticket items have dropped as many households remain financially stretched because of elevated borrowing costs and the rise of the cost of living over the past few years. Joining us now to discuss is someone who can speak to this from a new perspective. He is Silvio Tavares, CEO of VantageScore. It's a national credit scoring company, kind of the rival, the main competitor to FICO. The big takeaway in what you're seeing right now, Silvio, is that consumers entered this holiday shopping season with high levels of debt. But is that enough for them to put off spending, or are we going to get to that 3.2% increase Michelle was just talking about?
Yeah, we have a more modest view on the upcoming consumer spending season. And part of that is we're seeing high-end consumers struggling more with their ability to take on debt. We saw that in the most recent VantageScore CreditGauge, which we published just this morning. And what it shows is a surprising jump in delinquencies for those more affluent, higher income consumers. That's a headwind heading into the consumer holiday spending season.
Yeah, that is a surprise. I had not realized that. At what point does that start showing up in people's credit scores in a meaningful way and make them much more aware of what their limitations might be?
So late payments typically appear as soon as a month after that late payment is made. But don't get me wrong here. If we look at the overall VantageScore average credit score, a low score is 300, a perfect score is 850. The average consumer through the end of October was at 702. So that's a very healthy credit score that reflects some of the other data points that you've had on your show today. So the overall consumer is doing quite healthy, but of course there are a few areas where there is weakness. One area is we're seeing an increase in this sort of inflation contagion hitting the more affluent consumer, and that's a surprise and of concern as we head into the holiday spending season.
I am curious about that because, I mean, we've kind of focused a lot this year on the lower end consumer and the potential struggles that they might be having. If the higher end consumer is either tapped out in credit or at least at a point where they feel like they don't want to spend anymore, when do we start to see the effect of that in the economy?
Well, Romaine, you're exactly right. You know, if you look at the total average credit card balance through the end of September, it was about $6,300. It stayed the same through the end of October. So what that tells you is consumers aren't increasing their leverage very much. I think the reality is we're going to have to watch that. The value-conscious consumer might still see deals. I'm not projecting a Grinchy Christmas, but I think, in fact, there will be some increase in spending, just not as high as we've seen in prior periods.
Is the idea, though, too, I mean, we talk about the amount of spending that people might do this holiday season. I am curious just from the perspective of the lenders, if you will, for lack of a better phrase here. Are they being more strict with regards to credit? You know, you have to have this credit score before we extend you, you know, this money to buy this car or to get a new credit card. Have you seen an increase in that?
Yes, and, you know, there's a difference in what banks say they're going to do and what consumers say they're going to do and what they actually do. And what we saw in the most recent period is that banks actually pulled back on lending across every major credit category: auto loans, credit cards, mortgages. There was a lowering of growth in terms of increase. That tells you that banks are somewhat cautious entering this period of the year. And I think it also makes it less likely that the Fed is going to actually increase, decrease rates at its next meeting.
I got to ask you also about something else that's kind of looming, which is the looming student loan risk if President-elect Trump overturns Joe Biden, his loan forgiveness program. How much is that showing up in the data or on the minds of consumers as we move towards that?
It's not showing up yet. We're going to see those results in January as the consumer loans start being reported once again. And what you could expect to see is a lowering in the average VantageScore through January. That hasn't happened yet, but when it does, consumers are going to be surprised by that submarine debt all of a sudden appearing on their credit reports. And we anticipate that consumers are going to further moderate their borrowing at that point. And banks, quite frankly, are going to be more concerned about lending to a consumer with a lower credit score. We anticipate that to hit in January.
And how big a hit might that be?
Well, it depends on the individual, but for an individual consumer that hasn't repaid their loans, they're going to expect a hit of as high as 80 points on their credit score. That's quite meaningful. That can slip a consumer from a really good credit risk to what is perceived as a low credit risk. So what we say to consumers is stay up on those loans. Now's a good time to start budgeting repayments. paying. The silver lining is if you do that, you will actually expect to see an increase in your credit score because you weren't getting the credit for those payments you made on time in the past.
That gets to a question, though, about your just business overall, and I'm talking about you and your peers here. And how transparent is that process? I mean, in the old days, I think we all had a very negative view of credit scores because it was kind of like this black box. And I know this day and age there are a lot more tools out there. We would kind of track our debt and our spending levels and have a very concrete idea of how much that's going to affect my credit score.
Yeah, Romaine, I'm glad you mentioned that because the key to consumer credit health is actually knowing your credit score. VantageScore was the pioneer in really developing the ability for a consumer to look at their score themselves. Over 220 million Americans check their credit score every day using a VantageScore. If you're a Chase...
Every day?
Yes, yes.
Okay.
If you're...
Not every day. Now, yeah. I feel like maybe I should now.
Right. Well, you know, if you're a customer of the nation's largest bank, Chase, and you check your credit score, that's a VantageScore. And so we were a pioneer in that because nobody likes a gotcha moment, right?
Yeah.
You want to know what your score is before you apply for that loan. And increasingly, we're seeing consumers really take control of their credit health.
When do people do that? So, I mean, a good example is, I bought a car earlier this year. So that was, I definitely checked my credit score because I wanted to just kind of see and know what I was walking into. But other than like big ticket items, do people check their credit scores when they're just going to do their holiday shopping or do something maybe a little bit more minor than just buying a house or car or taking out student loans?
You'd be really surprised. The reality is consumers do check their credit score for that because today a credit score is not just used for credit. It's used for a variety of things. I was speaking to a CEO recently. He was applying for a lease, and they checked his credit score. And we're seeing the volume really increase significantly. So, for example, last year, VantageScore grew volumes by 43% to 27 billion scores. So we're seeing huge growth in that usage.
Wow. They check your credit score too even when you're paying cash for a car.
I know, and when you open a new credit card, they check your credit score. So you can't, open too many credit cards because that might be a problem.
Silvio, you got to tell them to stop doing that.
Yeah. Happy Thanksgiving to you both.
Likewise.
You too.
Silvio Tavares is CEO of VantageScore.